Hello guys, welcome to my new video. As you can see, we are again backtesting GBP USD. Now we are backtesting Wednesday's winning trade. Let's see why I did what I did. I sold on Wednesday. It was a beautiful sales, everything in our plan. It was a beautiful sell. Let me show you exactly why I was selling and exactly my entries, my exits. Okay, so we always start with the higher time frames, as you guys know. So higher time frames, we can see the trend is bullish from here to here, you can argue, but for now it is going down. Literally the trend is going down. So from some days the trend has been going down, so it's likely to look for sales, right? But that's one of the reasons why I look for sales, but not one of the strongest reasons. Okay, so it was the middle of the week, there was no news, as I will show you right now. Wednesday there was no news, as you can see here. There was no news, and on the economic calendar also, Wednesday there was no news, Tuesday there was news, Wednesday there was no news. So whenever there is no news on the markets, I've noticed that whenever there is no high impact news and the banks are open, that days are the most ideal days to trade, and we are getting the moves on that day. No inducement or no manipulation happening on that day. So now let's start with our daily bias. That's the very important. Always trade with your daily bias. If you don't have a daily bias, don't trade. Simple as that. As you can see, Friday closed as a bullish candle. You can say, yeah, it's not a bullish candle. It closed as a bullish candle, but we can consider it as, if you know how to study a candlestick, this is more of a bearish candle because of this wick here. Market went up, came down. The sellers were so strong in the markets on the Friday. But why I look for buys here was due to DXY. You can see on DXY, Friday was a bearish candle, Monday was a doji. Monday was a doji. Yeah, so on Monday I was looking for sales due to this Friday's candle. Friday was clearly a bearish candle here, so it made sense to DXY on Monday to go up. So this candle made sense to be a bullish because of DXY. Whenever your bias is not clear or GBP USD is confusing you, go to DXY and look at that, and it will make things so much clearer for you. And you can also go to Euro USD, and if you go to Euro USD, this Friday candle is a clear bullish candle. So on Monday it made no sense to look for sales, right? It made no sense. It made zero sense to look for sales. That's about Monday. Leave it on Monday right there. Now we are trading Wednesday, so let's focus on Wednesday. Monday was a bullish day, and Tuesday was also a bullish day. If you see on GBP USD, this candle is clearly a bullish pin bar. It was not able to close as a bullish candle, which is yellow in my case, but this candlestick anatomy, if you know how to read the candlesticks, it's very important. You can read the candlestick Bible, candlestick anatomy, candlestick psychology, why a candlestick forms, how is it made, right? The market opened here, opening price, went up, came down, again the buyers came in, took all the pressure, and here the buyers are so strong in GBP USD. But you also have to ask yourself, if I was only analyzing GBP USD on Tuesday, I would look for 100%, I would look for buys on Wednesday, right? But then we go to DXY. Look at the Tuesday's candle. Tuesday is a Marabuzu candlestick, huge buying pressure. Clearly we can see the buyers are so strong. Still the buyers are so strong, and there is a fair value gap, small fair value gap here to fill, and also there is SMT with GBP USD. SMT means GBP USD has already entered this daily demand zone, or has taken this 3 July low right here, swept this 3 July low, whereas on sorry, it's Euro USD. So let me go to DXY, and whereas on this candle it has not taken the 3 July high right here. This is the 3 July high right here, and it has not taken the 3 July high right here, and it has also not mitigated the supply zone yet, whereas on GBP USD the demand zone has been mitigated. So that's also one of the things you should look. SMT is a smart money technique which shows us like if one pair is not correlating with one, that it shows us that a reversal might happen, or the smart money are gaining liquidity to fuel a huge move, something like that. So looking at this, I was still not convinced to change my bias, because it was in the middle of the week and my weekly bias for the week was bullish on GBP USD. That means bearish on DXY. But we have to adapt to the markets, as you know. If you either react and adapt to the markets, or you die. I was still not convinced, so I went to Euro USD, as Euro USD is the brother of GBP USD, and Euro USD made things so much clearer. Tuesday was a huge bearish day, body closing below the previous Monday's low. Body closing, it's a very strong sign, and this made the things very clear. So now I was looking for sells. That is the reason why my bias was bearish on Wednesday. Simple, you get it right? So now the main analysis starts. Now I open the H4. On the on the H4 time frame, what I do is I mark the market structure. This is the lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. This is the lower highs, this is the lower low. So the market was trending bearish. Here the market shifted structure on Friday. As you can see, this is Friday. Market structure shifted on Friday. It's also looking like a head and shoulders, left head and a potential right shoulder, breakout of the neckline, root of the neckline, but we don't trade that anymore. Head and shoulder is our entry pattern, but yeah. So this was the change of character happened on Friday. So with huge volume, if the change of character is happening with huge volume, we consider that, or we don't. So this was a very ideal zone to trade from, this demand zone. It also had a small fair value gap. It had a fair value gap with a market structure shift, and it also with the trend, because now the trend is going up. So it made so much sense on Monday to take the trade. Boom, we took the trade, won the trade. And then on Tuesday, Monday, this was not one of the strongest demand zones. I'm just telling you, this I will cover at the weekly breakdown. So let me just go to the week. Let me just go to the Wednesday. Sorry, I'm wasting the time right now. But yeah, why I was looking for Wednesday's sell was, finally we have seen now on Tuesday, we have seen the lower highs, lower lows, body close. Okay, we have not seen the body close below this. Once the body close below this happens, it will be a change of character to the downside. Then we can look for sells confidently. But until now, we were not that confident on our bias on Wednesday. But even though we took the trade, why, I will show you. Exactly, look at this huge. If you are looking for sells, we have to draw a supply zone from the previous day. This was a London session, and I've also noticed one thing: the order blocks made on particular sessions have the move potentially on that session itself on the next day. If an order block is made on London, we trade that. If an order block is made on New York, we trade that on the next New York, and vice versa. Because it's GBP USD, it doesn't make sense to trade order blocks made on Asian session, because Asian session has nothing to do with it. That's why. So it was a London session trade, and I will show you exactly what I was looking for. I have drawn, to be honest, I had drawn this just a rough area here as a supply zone right here. So I go to the 15, and you know the drill by now. Asian high or low sweep according to your bias. My bias was bearish, so I was waiting for Asian high to get swept, which happened to the T. The supply zone was mitigated in Asian range, so not one of the best supply zones to trade from. So not one of the best supply zones. So at this point, I've deleted this supply zone. But what I did mark was, I literally marked this liquidity here, because there was huge liquidity from yesterday's London session sellers. As you can see, 12 p.m. is London session on India. There was huge liquidity here. If it sweeps this liquidity, might be we can see a reversal. As our bias was also bearish, we saw exactly what we want to see. This rejection is very, very beautiful, very clean rejection on 12:30 p.m. And I'm also noticing one thing: the moves are happening on 12:30, which is Frankfurt Open, rather than on London session. So might be have to adapt that too. And literally the move happened to the T. Asian high liquidity sweep from previous London session. The higher time frame buy. The most important thing is higher time frame. If you are trading with the higher time frame, the daily bias, then your win rate will be very, very good, and nobody can deny that. And I've also waited for M15 rejection, M1 change of character with a 10 pips stop loss. And if my stop loss was bigger than 10 pips, Look, in this case I cannot go to the 5 minutes, that's why I'm backtesting like that. But maybe if I had the 5 and 1, I would not enter this trade, but I did, so it was a winning trade. Got a beautiful trade. And let me show you DXY. Let me show you DXY then. And also sometimes you will get the Euro USD trade, sometimes you will get the GBP USD, so you have to be very careful, right? Whereas on USD, on dollar, there was liquidity from this London session low right here, huge liquidity from Monday. Swept that liquidity, clearly you can see, swept that liquidity and then made the move. Whereas on DXY, 1230 move was induced. 1230 was an induced and made the move on London. This is exactly what we want to see on the GBP USD, but it rather happened on the dollar. So it is what it is. Again, we have to adapt. So I am also noticing that the dollar is making the inducement and the move on London, whereas the GBP USD is making the move on 1230 most of the times. Yeah. Catch you on the next video.